We've got the third and final healthcare stock review. Welcome back to the channel, everybody. Hope you're doing well. Thank you for tuning in. Today, we're looking at ticker symbol ELV, that is Elevance Healthcare. The stock has been selling off just like UNH, just like CNC. UNH appears that there is more downside. CNC looks like there is much more upside and a lot of potential opportunities. ELV, we do not know a dang thing about ELV yet, but we're going to go ahead and look at our projection calculator to see, is this stock actually worth $30 or $16, or should it come down lower? What are institutions and hedge funds doing? Are they buying the dip, or are they selling into the ocean? And finally, we're going to do some advanced technical analysis to see if we can find a potential stock price support and resistance. So, first things first, let's just kind of glance at the numbers. They are profitable. They do offer a dividend. Uh, this is what we love to see. Under 15 for our price to earnings, and then forward PE is cheaper than what it is today. Meaning if the company continues on with their guidance, margins, revenues, profits, etc., moving forward, they become a cheaper company at these levels where the stock price is currently at. Quick ratio, we do not see that, but they probably have billions in cash, I'm guessing. Sales, 5 years was 11%, 3 years, 8.4%. Not some bad guidance here. Institutions own 92%. We'll go ahead and validate that. Yeah, this looks pretty healthy overall. It is in the S&P 500. Market cap is 71 billion, 280 million. Their income is 5 billion, 360 million. And sales 189 billion, 250 million. Absolutely crazy. And they do have some debt, so we're going to go ahead and take a peek at that as well. All right, quarterly, and let's just go down here again. Their profitability is kind of all over the place. Gross margins, they don't have it here. Let's just see. Elevance. Gross margins. Please be higher than 8%. Whoa, wait. From 27.8 in 2020 to approximately 15.9 24. This is... So gross margins, looks like they're going down. The last data, why I don't know why they're referencing old data. We have 2025 data here, and it doesn't give us their gross margin, unfortunately. So, let's go to the balance sheet. Let's see what they got for that cash. That cash. Not as much cash as the others. 8 billion, 560 million flat. And debt 28 billion, 178 million flat. Okay. CEO buying $2 million worth. That is beautiful. Always. Total liabilities 78 billion. Total assets 121 billion. That's probably the healthiest gap we've seen between United Healthcare and Centene Corporation. This looks to be the healthiest in terms of assets and liabilities. Let's go ahead and continue onward. And remaining 224,840,000. Potential. Something's got to be broken. Something has got to be broken here. Divide that total divided by our shares outstanding. $1,000 price tag. That is absolutely insane. We're gonna go ahead and let's just have one here. Shares outstanding, we're just gonna call it 5.50. 2 cents. Okay. And if we have one share, it's $1. Okay. The calculation's working. $1,000 price target based on these calculations. That is insane. Have they done splits before? Let's just go ahead and see. ELV. I'm guessing they've done splits. No split. Ooh, this looks like a beauty to chart though. I'm getting very excited about that. Okay. So very high price target here. I like that. Institutions own 92%. I'm gonna say they own quite a bit more. Let's find out together at the same time. 92% is old data. 106 is the latest, and it might be. It is close for all-time high. Very, very close. Wow. So institutional ownership is as high as it was back when the stock was around 500s. Wow. Wow. So this is a beauty, really. And we're going to go ahead and do the same treatment we did with our last stock. I don't know where that came from. Let's go here. Beginning, bottom of the channel. That's the top of the channel, and we'll just bump it a smidge. That is beautiful. Would love to see it come down to here. Absolutely. Saved by the Bell. Probably right there. Okay. This is our apex of opportunity right here. I don't think the stock is going to fall 50%. I don't think the stock will fall 50%. We do have to keep in mind also the healthcare impacts from the Trump presidency and the cutting of a lot of those public benefits, Medicaid. So, if we're looking at areas of support, really good areas of support, probably there. Again, that goes right into our apex. Next, really good areas, probably right there. I could see the stock closing the month 303.16. No, 307. But we have to keep in mind, although we've got a very attractive potential future price, the trend is your friend until the end. And I think the trend is not our friend yet. It has been going down for at least almost 1 year. Just huge drop down, huge drop down. We see a consolidation. We could see it again do a huge drop down. Although this is very attractive, I still think probably sitting on the sidelines might be your best bet for this one. Again, good support around 240. This one's just tough because I think the revenues are growing. Let's just validate that. I believe revenues continue to grow. Yeah, revenues continue to grow. Gross margins are going down. So again, we might see some more pain here, but incredible value if you have long-term patience. And the 200 SMA is around $226, which puts us right about here again. Right in this area. So yeah, I would have to say on all three of those companies, I think I like CNC the most as a potential turnaround. I think this one might have a little bit more consolidation, just similar to here. Again, a pattern we often see is emulated. History tends to repeat itself. So this is a hold for me, although the numbers look fantastic. The trend is your friend until the end. It's just hard to jump into something after it's only been just dropping down so hard. It just accumulates, drops down. Then we have accumulate here, and then potentially dropping down here, which would be a generational ad if you ask me. So that's all I've got. Thank you for watching the last three healthcare stocks. If you made it through all three, I will see you in the next one. I appreciate you. Take care.